Good morning and welcome to week 4 of EDCO's 64th annual virtual conference and showcase, Evolve On. I'm sure that you all agree that the 2021 EDCO conference planning team has delivered a diverse and thought-provoking program that challenges us to evolve our thinking and practical, inventive ideas to break through the status quo in an ever-changing landscape. Today is no different with Is Real Estate Still King? And Positioning Ontario's Workforce for Recovery in Evolving Times, presented by MDB. Many thanks to my co-chair, Belinda Witt-Graham from the town of Minto, and the entire planning team who volunteered their time and talents to create such a wonderful program. Please take a few minutes to visit the conference website for the list of these absolutely amazing people. I would also like to express our appreciation to our outstanding roster of presenters. Their photos and bios have also been posted on the EDCO conference website. In lieu of presenting speaker gifts, a contribution to the EDCO Scholarship Fund has been made on their behalf. A special thank you to all of our sponsors and those in our Innovator Showcase, who are also listed where? On the conference website. Make sure that you tune in to hear an important announcement about an exciting new initiative from EDCO, that EDCO is rolling out today, as well as this week's award winners. Look forward to those a little bit later. Now for the housekeeping details. Now that we're in week 4, I'm sure you can just say them along right with me. You know them all by heart. To connect to EDCO 2021, you will receive your login details to join the webinars on Tuesday of each week. Please check your spam or junk folders. If you don't receive your login information, please email Tabor Chamberlain at the EDCO office. There we go, right in the chat. We'll post the email in the chat. You will receive the login details to the session videos at the conclusion of the webinar series. Today's first session has been pre-recorded in an effort to ward off technical gremlins. Gremlins. However, our panelists will be with us live following the presentation to answer your questions. We encourage you to actively participate in all of the sessions through the Q&A chat, and I know you've all been participating amazingly on that Q&A. A reminder that the Q&A and chat buttons are located at the bottom of your screen and that you have the ability to upvote questions. You'll see a raise hand function. Remember, just forget about it, pretend it's not there. Use Q&A to ask your questions. Please also engage with your fellow attendees through the chat, either as a group or individually. It's a great way to share your thoughts on the presentations, provide resources, and relevant web links. That chat has been amazing. Finally, if you experience technical issues, please send an email to the address shown in the chat. Now, I'd like to kick things off this morning with our first session. Is real estate still king?
Hello and welcome to the Is Real Estate Still King seminar. I'm really excited about today's session. With the impact of the pandemic, we know that real estate has changed. And one of the key things, of course, in economic development, where real estate really is king, that's what drives so much of our actions, is understanding the changes that are going to take place coming forward, or moving forward, I guess, with respect to the pandemic recovery. We have a great panel today, and we've got Bill Argyropoulos, Chris Rickett, and Brendan Kenny, and these guys are going to go over a few different areas of their expertise. And I really think this is really pertinent because Bill's going to give us a highlight of what to expect in terms of real estate in the future. Chris is going to talk to us about how that impacts the bottom line, which for municipalities, of course, is the tax base. And Brendan's going to give us a little bit of insight in terms of some initiatives that you can take advantage of the pandemic as the economy recovers. So I'd like to introduce each of the three panelists right now. Bill is part of Avison Young. He's got 33 years experience in the commercial real estate field, and he's one of Canada's leading market research analysts. And he's often quoted in the media, which is how I found him. So he's been with Avison Young for quite a number of years, and he's going to give us that overview from corporate real estate perspective. Chris, of course, is a proud municipal servant and civic innovator with a keen interest in urban planning, economic development, technology, municipal infrastructure, and political economy. Get this, his past vocations include municipal councillor, economic development, professional, environmental planner, eco-business zone creator, publisher, magician, punk rock concert promoter, taxi driver, and community rabble-rouser. He's currently with MPAC, and he's working in a tax policy type role. And here's the thing I have to say about that. Not sure we have enough time to dig into all the stories behind those career choices, but I must say that having a person like Chris work in tax policy is like a rock star choosing to be an accountant, just saying. And lastly, of course, we have Brendan Kenny, and he's going to give some insights as former economic development champion for the town of Innisfil, and now working with the town of Collingwood. He's a thought leader in community and community benefits of remote work, and he's previously led the launch of the Work from Innisfil remote program, which is aimed at attracting and supporting remote workers in the rural community. Excuse me. Moving forward, I'm going to turn this over to Bill now, and he's going to share some of his thoughts on real estate in Canada.
Well, thank you, Cephas, and good morning, everyone. I wanted to, take this opportunity this morning to provide you with a high-level overview of the commercial real estate sector and offer a sense of how, the latest trends are playing out, specifically in the office, industrial, and retail segments of the market. Now, let's start with the office sector. Change slide, please. The office sector has been impacted significantly by COVID-19, and the pace of change has even led to debate as to whether the new normal is cyclical or structural in nature. Co-working providers and tech firms have driven much of the demand for office space across markets over the past several years. However, the pandemic has challenged the co-working model and brought lofty expectations for this sector down to earth, as we've seen in the last couple of days in the papers with Knotel filing for bankruptcy. Meanwhile, reactions from some large tech firm users have been mixed, making big space commitments in major hubs like Toronto and Vancouver, while also placing large blocks of space up for sublease and issuing statements regarding the implementation of indefinite work from home plans. In many ways, COVID may have provided an unexpected release valve, especially in extremely tight leasing markets like downtown Toronto. However, lower leasing volumes reflect the mood of the market as tenants stand on the sidelines, meaning demand is low, even though there's more space available for lease today. In the country's largest market, my hometown, the Greater Toronto Area, available space has grown unabated and more than doubling on a year-over-year basis, outpacing the growth in direct landlord space. Over half of that space is housed in Toronto's downtown market, where sublet availability has more than quadrupled and now accounts for over 1/3 of all the available space in downtown Toronto. And it's not just tech companies shedding space, it spans the professional services firms. To date, most sublets are small, but larger blocks are starting to hit the market, which are tilting the scales in the tenant's favor, meaning that some landlords will be forced to adjust their pricing. But there's even something bigger and transformational underway in the office sector. Office employees went to work from home in droves last spring, revealing that flexible work is feasible, practical, and increasingly desirable. Advancements in technology and digitization have broadened how, when, and where work happens, giving way to the phrase that we are hearing often nowadays: work is what you do, not where you do it. Employees who did not previously have flexible options are now voicing their expectations for flexible work, health and safety, and improved work-life integration. Prior to COVID-19, many organizations conducted space utilization and observation studies to identify how and where space is being used. In work conducted for Avison Young's clients, we found that pre-pandemic workspace was utilized on average 50% of the time. This means that organizations experienced an overall 50% office vacancy, which means valuable resources such as funds spent on vacant office space could be better redeployed to meet core business requirements. Despite the admirable efforts by landlords and employers to provide safe working environments, the return to office has been slower than expected. Anecdotally, a relatively small percentage of space is being reoccupied today, given each city's COVID-19 case counts and restrictions, influenced by the health and wellness concerns of employees, such as the use of public transit. COVID-19 is seen as a call to action to radically shake up the thinking of workplaces and office building design. The tools at businesses' disposal should be enablers of organizational change and a vital instrument in the war for talent. And the war for talent is key. After all, people matter, and business as usual is a concept that's quickly aging out right now. At its core, workplaces provides people with a physical place to connect, collaborate, and change with others. Now more than ever, companies who invest in the human experience and create meaningful spaces built for high performance workplaces with digital skills and experiences can see a 4 times increase in profitability. Change slide. What's becoming more evident is that a one size does not fit all. Organizations will have to consider the multi-generational diverse workspace while planning for future workplaces, ultimately delivering flexibility for their employees in how and where they work. Many organizations are shifting their thinking from a headquarters to a hub and spoke mindset and optimizing their overall footprint in the process. I believe that many organizations will choose an option somewhere in the middle of the spectrum, depending on their individual business requirements, of course. Let's start with the traditional headquarters. This is a large centralized location with few remote workers or remote work policies in place. Individual work points are typically 100% assigned with little to no desk sharing. Some hoteling work points may be provided. Next is the central hub. Hubs serve a different intent. They are more like concierge spaces or campuses used as needed as a place to connect, collaborate, learn, socialize, and be supported. No longer considered a warehouse for workers, the fluid design provides spaces for collaboration and teamwork, all hand meetings, onboarding, in-person learning, training, and even those happy hours. A central hub serves as a central location and or campus with the potential for a footprint reduction anywhere between 30 and 60% compared to a traditional headquarter model. They are set up for a diverse level of remote work participation, connectivity, and abundant meeting rooms and social spaces. Next is the hub and spoke. A hub and spoke model offers a central location in conjunction with distributed workspaces, say in a suburban, nearshore, or even offshore location. This approach is gaining traction as organizations reconsider the density and safety consideration for their employees. It's also highly responsive to the desire for flexibility as voiced by employees today. Spoke locations reduce employee commutes to a central site where employees can work from near home or alternatively move their home to an even more affordable option, which we're starting to see in the Greater Toronto Area. The spoke approach can further help employees to gain that sacred work-life balance that everyone is seeking. Some of the benefits: tap talent anywhere, employee productivity, reinvest in real estate budgets elsewhere, reduce commutes, and schedule flexibility. However, there are also some challenges, right? Developing and nurturing culture, working remotely may inhibit engagement. Hands-on learning and mentorship, if not properly managed, are all challenges that have to be overcome. And finally, what we're calling a fully distributed model, a completely distributed workforce with no physical office presence. Most, if not all, collaboration is performed virtually. Organizations may occasionally charter off venues as needed for physical interaction. This has even given rise to a new corporate job title, Head of Remote Work, Chief Remote Working Officer, tasked with navigating organizations into the post-pandemic world. As major employers revisit their workplace strategies, it will take time for decisions to be made and impacts to be felt, meaning the office sector is not out of the woods yet. Change slide. Industrial by far is the darling of the real estate sector, even in pre-COVID, driven by the rapid expansion in e-commerce and the need to locate logistics and distribution uses close to urban centers, all in an attempt to shorten the last mile. The industrial market was already benefiting from strong fundamentals heading into the pandemic and has proven to be resilient thus far, with the biggest hurdle being a supply-demand imbalance, which is evident in most markets, not only in the GTA, but across Canada. Industrial vacancy remained near record low levels across most markets, despite new supply being delivered. And the result being driving rents higher, and with the consensus that rents will continue to rise through 2021. Higher rent, higher cash flows means more attraction of capital into this sector in 2021. However, land supply constraints, whether they be physical, political, or geographic, such as the Green Belt and Places to Grow Act in Ontario, and rising costs are increasingly leading developers to embrace verticality, whether through higher clear ceiling heights or multi-level development, already underway in markets such as Vancouver, with Oxford Properties, and something to watch for in other supply-constrained markets such as the GTA. The unrelenting pressure generated by the rapid expansion in e-commerce and the need to locate logistics and distribution uses closer to urban centers may very well accelerate the conversion of traditional big box retail spaces, which are being increasingly vacated by retailers in many markets to accommodate the rising need. High occupancy levels and strong leasing rental rate spreads, especially on renewal deals, will keep investor attention squarely focused on this asset class in 2021. Change slide. Retail. Retail, without a doubt, has felt the full impact of the pandemic. The sector, which has already undergoing a rapid evolution due to changing consumer habits, will face an acceleration of those trends in 2021. One immediate impact of COVID-19 lockdowns was an unprecedented spike in online shopping, and as a byproduct has fueled an already hot industrial market. The emergence of new generations of retailers and consumers has put pressure on all aspects of the supply chain. It has also reignited debates around last mile delivery and the implications of e-commerce for physical retail. Retailers everywhere have and continue to face a variety of pandemic-related impacts, including mandatory closures, reduced operating hours, and minimal foot traffic. Since local economies initiated phased reopenings, government financial aid and rent relief from landlords have helped many retailers, no doubt, remain in operation. But these measures will not be able to continue indefinitely or save every business. On the other hand, landlords do not necessarily want vacancies in their retail assets at a time when few new tenants are in the market for space. But responses vary by retailer and location as landlords assess their portfolios strategically. Enclosed malls and street front retail continue to suffer, but strip centers anchored by food retailers and other essential services are definitely thriving in this pandemic. The pandemic has resulted in some long-term changes, including encouraging Canadians, particularly in the older demographic, to take up e-commerce in greater numbers. In response, many retailers and restaurants have increased their online presence and capabilities, adding online delivery and ordering options for consumers. This has generated tremendous revenue and notoriety for food delivery services such as Uber Eats, Skip the Dishes, and DoorDash, although raising the issue of the fees they charge to already struggling restaurants. Underutilized retail and restaurant spaces are increasingly being used as dark stores to fulfill online orders, and even ghost kitchens to prepare food exclusively for delivery. Alternative uses that may gain prominence in coming years. Online grocery shopping has also gained traction as major grocers have expanded their offerings to consumers, bolstering staffing levels to do so. Canadians are also saving more and directing discretionary spending towards food and home improvements. The uncertainty resulting from the pandemic has accelerated another trend, and that has been gaining momentum for several years in the retail sector, but gaining even more prominent today. That's the repurposing of retail space and redevelopment of retail-only assets as mixed-use projects, including office and residential space along with retail. This trend may also intersect with the concept of what we're hearing is the 15-minute neighborhood, where mixed-use communities provide residents with all the amenities they need to live, work, and play within a 15-minute walking distance. Popular among academics and planners for now, the idea may gain momentum given that some of the local shopping and working resulting from COVID-19 could be harnessed to promote longer-term regeneration Location and demographics will make the concept more viable for some areas than others, but the idea could influence redevelopment plans and have an impact on the longer term environmental impacts on these communities in the years to come. Physical retail is far from dead, but we are clearly seeing a continued rationalization of space by retailers who were already overexposed in terms of physical footprint, as well as business failures where retailers have failed to adapt. Both processes have been accelerated by COVID-19, but we're already well established. Retail will remain a riskier investment as the pandemic persists and capitalized owners are likely to reposition assets where possible. On the bright side, the pandemic has also stimulated the transformation of many retail businesses within which physical stores still play a crucial role in an evolving omni-channel strategy. In closing, there's no doubt that the commercial real estate market was challenged by the pandemic's emergence in early 2020. And let's face it, we expect COVID and the new variants, unfortunately, to continue to be the biggest factor in 2021, and the ripple effects will be far-reaching and disruptive. And although the disruption has been a catalyst for innovation and change, uncertainty will hang heavily on occupiers and investors alike, with winners and losers emerging through this crisis. Thank you for your time.
Thank you, Bill. Looking forward to dig more into that as we get to the question and answer segment for sure. At this point, I'd like to turn it over to Chris Rickett, Director, Municipal and Stakeholder Relations with the Municipal Property Assessment Corporation. Chris?
Thank you, Bill. Thank you, Cephas, and for that overview. I'm going to dig into a little bit about what we've been seeing at MPAC in the market and really building on Bill's work, as well as give some economic development insights. Of course, MPAC, we are responsible for assessing and categorizing all 5.4 million properties across the province of Ontario. And that we really have the most comprehensive and complex property database, and collectively those 5 million some properties are worth about $3 trillion. And when you look at that breakdown of properties, it's always good to understand that about 90% of those 5.4 million properties are actually classified as residential. So it's really that residential tax base, as we know, that really drives the revenue and the value here in Ontario. So much so that when we look at the revenue that municipalities generate from the property assessments that MPAC provides them, is that we generate about $30 billion annually for Ontario municipalities, which ultimately use those funds to invest in the important community services that we all enjoy in our municipalities. Now, when we talk about property values and property assessments, currently all of the properties in Ontario are based upon a valuation date of January 1st, 2016. So as you can tell, the market has changed a lot since 2016, but the values that your property taxes are based upon are based upon those 2016 numbers. We were planning to have an assessment update in 2020, which would have changed that valuation date to January 1st, 2019. However, of course, as we all know, with COVID, that assessment update was postponed. And we are still waiting for direction on when that next assessment update might be and what those impacts might be from as far as phase in and those types of details. That said, what we do focus on is we're continuously supporting municipalities and processing their building permits and their developments to bring them on new assessment and supporting them throughout the pandemic and getting new revenue in to support their delivery of services for residents and businesses. And of course, in all of this, we continue to monitor the market and understand what the changes are and prepare for whenever that future assessment update might occur. So I'll share a bit of insight on what we're seeing in the market right now, and you know, I think we're still very early to understand where this might be going, but just give you a bit of a sense of some of the changes that we've been seeing. Of course, we've heard lots in the news about residential sale prices. This graph basically shows all of the residential sales from January 2016 through to December 2020. And that blue line in the middle basically showing the uptick in value of those properties through that time. So if you took the median price of a residential property in Ontario in January 1st, 2019, it was $370,000. And in January 2019, that had increased to $435,000. And what we saw at the end of December was that the median price had went up to $601,000. Again, it's still premature to really understand what's the pandemic's impact is going to be here. And of course, those price differences are they vary depending where you are in the province. The areas with the biggest increases really being the ones that either are much more affordable or are seeing lots of investment into transit and these types of things, or are seeing lots of population increases. So places like Kitchener-Waterloo, Barrie, Peterborough, Ottawa, where these are the type of communities where we're seeing big increases in those residential values. In the retail sector, as Bill has highlighted, even prior to the pandemic, we had big challenges in this sector. Again, lots of conversions, as Bill alluded to, and in seeing that diversification in those properties. And of course, since the pandemic, we've seen that explosion in online sales, over 100% increase year over year. And so you can see from this trend line that we're seeing a downward trend in sales and on prices as we move into this sector. That said, there's a high degree of variability here, and there's so few sales observations. And really, I think what we're seeing here is, everybody's trying to figure out where this market's going to land and what that impact is going to be from the impact perspective. And this is kind of gives you a sense of what that change looks like across the province and what we're kind of seeing those change in values across Ontario. Again, high variability here and low number of sales to really inform what is ultimately happening here from the pandemic, but something that we continue to watch and try to understand as we prepare for a future assessment update. And of course, when you look at those retail sales, again, that huge spike at the end of the day, that over 100% increase and spike in online sales. And it'll be interesting to see how this changes people's thinking about the format of retail itself. Pre-pandemic, we are already starting to see groceries stores, as an example, push for assessment changes, saying that if they had designed a store today, that they would have more, they would have a different design to service more online orders. And so as we see these changes in the retail sector and how they adapt to the pandemic, how that plays out in the values, and of course the design of our retail stores will have a big impact on ultimately what those values are. Bill, of course, covered the office sector. And again, what we're seeing from a sales perspective here is we haven't seen the same impact as the retail sector from a closures and vacancies perspective. But overall sales volumes have been declining, as you can see from the bar chart here. That said, the values seem to be holding generally. But as we see leases start to come up for renewal, we'll likely have a better idea of how the pandemic has impacted this sector. From our own analysis, we believe about 40% of office sector leases will be up for renewal over the next 2 years. So as that happens, we'll have a better understanding to see what's happening in this sector and ultimately what the pandemic's impact is. Of course, the work from home issue is still being debated. I suspect many companies will end up in the middle and having much more flexible work from home as well as having office space. However, as we've seen some reports, some employers are wanting to get all their staff back in the offices. But I think in sectors that are highly reliant on talent and competitive for talent, like in the tech sector, they're going to have to loosen up and allow folks that type of flexibility. Generally, though, I think, as Bill has alluded to, any return to office is going to require redesign for safety, probably different size floor plates and costs, and ultimately rents are all going to change in the sector. And so as we start to see that, we'll start to figure out what those values tend to look like. And again, this is a bit of a heat map to kind of give you a sense of where we're seeing those sales. And again, we're seeing increases in some markets: Ottawa, Eastern Ontario, Western Ontario, And again, these areas like Kitchener-Waterloo and Ottawa that have tech ecosystems and are also making investments in LRT and such. So these places where we are seeing some sales, but again, it's all very early, and there's limited sales to kind of derive where the future might be going. And of course, the hospitality sector, which has been severely impacted by the pandemic. This is occupancy rates are of course at all-time lows. Some below 40%. In urban centers like Toronto, below 30, if not lower in some cases. Um, you know, we see from a sales perspective, similar to office, there's not a lot to actually paint a full picture of what's going on. That said, the sales that we have seen are largely either motel type properties or hotels that the locational site value is actually greater than a continued use as a hotel, such as converting to residential. And so we don't put a lot of weight into these numbers right now. And I think it's going to take some time to really understand what's happening in this sector. So that's a little bit about what we're seeing in the market generally, and from a sales perspective. And we continue to use that information to prepare for a future assessment update to support our municipal partners. That said, I did want to share a few economic development considerations. These are purely personal and not MPAC endorsed, but since my background is in economic development, I thought I'd share kind of some of my thinking in this space. I think despite the hype around everyone working from home, I really think it's somewhat overblown. I could work from home pre-pandemic, but like I can't wait to get back to an office and see people and go for a beer. Um, the vacancy rate, of course, in Toronto is increasing. That said, the tech giants like Amazon and Shopify, even though they've said they're going to have everybody work from home, they're gobbling up space regardless. And so, they're taking advantage of the opportunity that's there on the market now. But I suspect again, what we'll see is flexibility from employers in work locations, but still requiring some in-office attendance. Whether that be for broader meetings or team collaborations or those types of things. Um, and I think ultimately you're going to see flexibility from employers that have to compete for talent. If you're trying to attract tech talent, you're going to have to be flexible as an employer and offer that work from home experience as well as that office experience that people do enjoy. And I think from a broader perspective, while the last decade has really seen a sucking of office jobs and tech jobs into the downtown of Toronto, I suspect we'll start to see some stronger growth in suburban markets as offices are more distributed. And I think that will play well. While co-working suffering right now, I think co-working will be a potential movement out to suburban centers, and that'll give companies much more flexibility, and to remove some of that financial risk from companies wanting to provide options for staff that might be wanting to take advantage of that more distributed office model. That said, I think as downtown comes back to life, people remember what they liked about working there in the first place. The shops, the restaurants, the bars, all of these things that make the action that people enjoy. We'll start to see a rebound in that office market downtown. But that doesn't mean that staff are going to necessarily be commuting 5 days a week. And I think that's the key piece here, is that there's opportunities for municipalities outside of the GTA, and then we can have much more maybe equitable economic development across the province, and not highly concentrated necessarily in the GTA and in Toronto. But ultimately, people want to be around people. After spending 10 months in my basement, I can't wait to get out. And what made downtown Toronto a good spot to be, that activity, it'll ultimately that street that street life attracted talent, and that talent attracted to companies, and really that self-reinforcing cycle I suspect will start to heat back up. Um, People are ultimately drawn towards action. And that said, there's always been leakage out of downtown and out of Toronto, and the pandemic really provides an opportunity for communities to take advantage of that. But it's not going to be as easy as just setting up a co-working station. It's going to require providing those quality of life amenities that talent are attracted by, unique community experiences, recreation, entertainment, and street life, as well as opportunities to connect with people. So combine those amenities with the talent, and there will be opportunities to leverage a much more balanced work life that we could result from COVID. But remember that the idea, at the end of the day, talent isn't tied to geography, cuts both ways. Yeah, sure, it's an opportunity for someone to move out of downtown Toronto 5 days a week and relocate to your community. But if that job can move to Barrie or Collingwood, it can also be potentially relocate to India. So, don't focus your economic development strategy on tearing down this kind of regional economic development system we have in Ontario. Ultimately, we all got to focus on building it back up much more equitably across the province and really supporting each other. And that really means we got to collaborate across the province with our municipal partners. And just a few thoughts on Main Street and the future of Main Street. The core of any unique community really is your main streets and your downtowns. And we all know the challenges that our main streets were seeing pre-pandemic, and now they're in even more rough shape and need a rebuild. Main streets are going to need to embrace tech to survive. Online sales is part of that, but it's not the only part. It's also deep analytics that really drive customer engagement, and that's going to be the key. And the reality is technology is much cheaper and easier to use now, and ultimately, Main Street businesses have a real opportunity to kind of really, how do you compete with Amazon? And the technology is at your fingertips to do that now, and we really need to figure out how we help Main Street businesses do that. As economic development professionals, this really means leveraging programs like Digital Main Street, but it also means really embracing inclusive economic development or community economic development to really focus in on how you rebuild your Main Street and satisfy those local needs. The Canadian Urban Institute really found that Main Streets that best coped with COVID were really locally owned. The businesses that were locally owned, they lived locally, they were selling to those local populations. And so as we kind of rethink Main Street coming out of COVID, taking a much more active role in identifying the gaps on your main streets that your local customers want to buy from, and recruiting local entrepreneurs to fill those gaps, is really going to be a way to build much more resilience in your main streets. And then ultimately, I think the last piece here is, experimentation. There's no answer fully out there. And as public servants and economic development professionals, you're going to have to, experiment. And so that's going to be, continuing the experimentations that have happened with the public realm through COVID. It's going to be working with entrepreneurs to try new business models and new opportunities, and continuously pivoting and agile and trying new things in your communities. So there's some great opportunities here. We've realized, how a lot of these businesses were challenged as both pre-COVID and during COVID. And so really thinking about how we build a much more equitable, main streets, leveraging technology and supporting local entrepreneurs to ensure we have that kind of diverse street life that people are attracted to is going to be a key opportunity for Main Street moving forward. Thanks for the opportunity to say a few words, Cephas.
Thanks, Chris. I appreciate that. I think a couple of your points there really on co-working and the opportunity for rural areas really lend themselves well into our next presenter, of course, who is Brendan Kenny. Brendan Kenny, of course, is a thought leader in economic community benefits. We're going to hear about some of the programs he's been involved in. And of course, he's moved on as manager of economic development now for the town of Collingwood. Go ahead, Brendan.
Thank you very much, Cephas. So as Cephas mentioned, I am now with the town of Collingwood. I am formerly the town of Innisfil, and that's where the vast majority of my work with remote and my work with flexible office space has happened. So I'm going to reference that quite often, but then also reference some of the things that may be going on in Collingwood as well. Next slide, please. So today I'm going to talk about real estate adjustment. I'm not going to duplicate what's already been said, but I do want to focus on three key things. First, the flexible and co-working office space model. I think the future is flexible. The hub and spoke model that Bill mentioned, and I want to go a little bit deeper on that, and then remote workers as we close, and I want to provide some resources to our audience as we move through. Next slide, please. So this adjustment is happening and is providing opportunities for rural and suburban communities. So Innisfil is largely rural. It is 45 minutes from the 400 and 401, and you're starting to see that lifestyle exodus from the larger centers, right? So to me, COVID-19 is an accelerant, not necessarily an agent of change. And really what that means is things that are happening at a quicker pace. Things that may have happened in 5 years from now are happening in 6 months because of COVID, as people decide that they don't want to be in a 400 to 800 square foot condo in downtown Toronto with no backyard and a growing family. They want to move out to a suburban or rural community that is sort of that inner or outer ring, as we're starting to see, to really facilitate their new work style, which is an infrequent or reduced commute. You're seeing, certainly during the pandemic, and I do believe after the pandemic, that commuting will be less frequent for a lot of people, and even a small change, even a 10% or a 15% change in remote work, can have very drastic positive consequences for these rural and suburban communities. Next slide, please. So to me, the future is flexible. This is a graph pre-pandemic, and it shows the growth in co-working spaces worldwide. Of course, this growth did not happen in 2020 and probably won't happen in 2021, as these are either flat or declining. However, that is a pure consequence of the pandemic. And I really do think that co-working spaces are very well positioned to capture suburban growth, to capture this influx of remote workers into these communities and out of the major centers. Co-working is actually a relatively new term. 15 years ago was the first co-working space that opened in Toronto. And we've seen, since then, very strong traction in large centers across Canada. But frankly, Toronto being the center of that. We've seen some, but not much traction in those rural and suburban centers. So, pre-pandemic, obviously there was that rise, and I actually do believe in that acceleration theme, that this will accelerate post-pandemic. In fact, over the last few years, Canada has quadrupled its flexible office space to over 6 million square feet countrywide. So I think this transition is going to happen in two different ways. One is similar. I know we have Avison Young on the panel. I am going to mention Deloitte. Deloitte, adjusted their office space in downtown Toronto to a purely flexible model, took away everybody's dedicated spaces. I do think that, companies will either downsize their footprint and go to that hub model that Bill referenced, and then take everybody out of those desks and make them into a little bit more flexible with some remote options. The second one is, even with a gradual decrease in dedicated office space, a portion are going to transition to rural and suburban areas, especially the communities that value co-working spaces as key economic development infrastructure. So I really do think there's a place for this acceleration of co-working spaces and a real opportunity for us as economic developers to take advantage of that. Next slide, please. So there are a bunch of different options that private companies have. One of them is to provide a stipend to their employees, right? As they reduce their real estate footprint from 100,000 square feet to 25,000 square feet, they may want to have their workers commute less, be more productive, gain 2 to 3 hours back into their day, depending on where they're coming from, and work in private co-working spaces. So that, companies have already started doing those stipends for people. Not all co-working spaces are open right now, and certainly in Ontario, they're not currently. But I think as you see the vaccines start to, increase through Ontario, you will see those co-working spaces begin to operate, and you will see, players from larger companies enter those co-working spaces to try and build that sense of community. And really, that's the important part of a co-working space. Office space is very simple. However, what you get in a co-working space is that sense of community with like-minded people. You get entrepreneurship, you get remote work, you get, sort of solo entrepreneurs, or people from larger communities all mingling together, sharing ideas, and then really becoming better for it. Another way that co-working actually operates is as an alternative to home-based. And, even post-pandemic, when you have people working from home, it's not suitable for everyone. You may still be in a very small space. You may have, a yappy puppy at home. You may have, an opportunity to meet with a client and you need a professional atmosphere. So really all of those things lend to the co-working model. And the one thing that I do want to, operate on in a ECDEV lens is co-working as ECDEV infrastructure. To me, it's a critical partner. It's as critical as the Small Business Enterprise Center to be partnered with a co-working space or a group of co-working spaces in your community. There are public and private models. In Collingwood, we have a private operator that works really closely with the municipality. And frankly, the demand that we're fostering in the economic development team, we're sending some of those clients to the co-working space because they don't want to sign 5 and 10-year leases, especially if they're at the early part of their operations. In Innisfil, I was part of a 4,000 square foot hub that we built, public hub. We pay for the lease. And we actually use that in a couple of ways, but primarily as an accelerator landing spot. And accelerators are becoming a little bit more in vogue with the economic development crowds, and either partnering with a private space or building a space of your own could be a logical sort of piece of the puzzle for the accelerators moving forward. Next slide, please. So a couple of resources before I move on. The first is GCUC. They call themselves Juicy. They are a co-working community, the Global Co-working Unconference. They do a conference in the US every year, and they do one in Canada, I believe, every other year. And I would highly encourage you to attend that or try and get connected with them in some way, because they're a very valuable resource and really helped Innisfil build that accelerator hub the way that it did. And then Everything Co-working is actually a podcast. If you want to pop on your phone now and check it out on Apple Podcasts or Spotify or elsewhere, it's a really great, treasure trove of ideas, and they have a long back catalog where you can pick and choose, the sort of interesting topics that you'd be looking for. Next slide, please. So I'll touch a little bit on Hub and Spoke very quickly. As Bill mentioned, there's a mix of, sort of long-term dedicated office space that these larger employers are using. Plus there's remote options. And Chris talked about the competitiveness of attracting and retaining talent. And that's where I think the mix will work, right? We've all kind of been stuck in our homes for the last year-ish. I don't think that's an ideal scenario for most people. Certainly, I think, people do want to mix. And frankly, we did an internal survey in Innisfil, and 90% said they wanted to work remotely at least half the time. So there is an appetite for this, and I believe there's an appetite in every sector. I think there's a huge opportunity in government, and I have some learnings there as well. This is mostly for larger employers. They're going to map where their employees live. They may have 50,000 square feet on Bay Street in Toronto, but they may want, this flexible office opportunity in these rural and suburban markets. And it's really about positioning your community to take on this growth. This could be providing that stipend, like I said, to people to operate in a private space. Or, and this is the more interesting opportunity, they may be looking for 1,000 to 4,000 square feet in your downtown that has some leasing opportunities, or in an underused municipal building, to be able to position some of their employees in your community. And especially, we're talking about the Outer Ring GTA. I'll talk about Simcoe County because I know that the best. If there was a hub positioned in Innisfil or in Collingwood, everybody from the surrounding area and all the employees, I'm sure, would prefer to commute to those destinations than to commute to downtown Toronto. And one of the interesting parts that's happening here is commuting distance is actually widening. So communities that were 2 hours out of a major center, 2.5 hours out of a major center, they may be in play for some of these opportunities on a lifestyle perspective. And really the perfect, example is Muskoka. It's a difficult commute to Muskoka, or from Muskoka, but really more difficult from Toronto to Muskoka, especially if you're going on a Thursday or Friday in the summer. But if there were a hub located in a Gravenhurst, for example, they may be really well positioned to take some of those employees that are coming from Simcoe County, Muskoka, and elsewhere. Next slide, please. So the last thing I'm going to talk about, try to be very brief for you today, is remote workers. And this is something I'm very passionate about. Undoubtedly, we are going to see growth post-pandemic in this. And like I said, a very small change to the amount of remote workers. And even if they're not 5 days a week, 2, 3, 4 days a week, have a great impact on these rural and suburban markets. There was growth pre-pandemic. Over the last 15 years, about 173% growth. And really the thesis here is, if you can reduce their commute, if you can keep them in your community or attract them to your community, you can create local jobs. So, often we're attracting companies, we're attracting a large manufacturer that brings 40 jobs or 100 jobs. Well, what if we could bring 40 remote workers, 100 remote workers, or even better, what if the people that were commuting outside of your community pre-pandemic stopped doing that all the time post-pandemic? They would be more engaged in your community. They would volunteer more. They would shop locally. They would literally be more connected to your community. And that's really the focus here. To use Innisfil as an example, pre-pandemic, 82% of the workforce commuted elsewhere every day. And that was a 2 to 3 hour commitment for them. Imagine if they were in your community at 4:30 p.m. instead of 7 p.m. every day. What could they do with that extra time? What could they do with their families, their friends, their neighbors, their municipal governments? Would they start a business potentially and having, different opportunities there? One of the things I want to touch on as well is remote attraction. And it really is a skilled workforce for your community. Remote workers are often highly educated, highly paid, and highly skilled. And so you're looking at, if you can keep, let's say, another 2,000 people in your community on a regular basis, They will create that economic development for your local community. It's another tool in your toolbox to try and attract somebody to your downtown, and maybe you have a struggling downtown with a lot of vacancy. And now you've got this kind of more captive audience there. And I want to touch on Tulsa Remote. Tulsa Remote is a groundbreaking program from the city of Tulsa, Oklahoma. They launched it a couple of years ago, and I do want to note it is funded not by the municipality, but by a third party. It's kind of a trust that was set up by a family. But their goal was they want to infuse life, skilled workers, the tech industry into Tulsa, and they couldn't do it by attracting companies. It was very difficult for them to do that. So what they did was they actually paid remote workers to come to their community for a certain period of time, not a great deal of money, and they provided some housing benefits. And then they also connected them to the community in which they live. I would not suggest anybody pay remote workers to come to your community. I think they're going to come anyway if you can position yourselves and do some pretty strong SEO. However, Tulsa Remote has all of this really great structure online to be able to position your value proposition, to position your community to take on these remote workers or keep them, as I've mentioned. Next slide, please. And so I really do encourage you to go to workforminnesville.ca/blog. It's essentially a launch that we did. It's our soft launch for our website, which we're going to be doing a hard launch shortly, or they will be doing a hard launch shortly, where we talk about what remote workers need. And really the one thing that I will say is, please don't patronize remote workers by trying to segment them for the rest of your community. They're not looking for, Slack channels for just remote workers and remote worker mixers and all those type of interesting things. What they really are looking for is integration into your community, your arts and culture, your downtown, your nightlife, your entrepreneurial ecosystem. They're looking for that. And honestly, if I'm a millennial in downtown Toronto, I have 100 options within 90 minutes. So I'm looking for, these key things when I'm searching for my next community. Internet is going to be the focus. You may not have, all the internet you're looking for in every part of your community, but in a downtown or in a new suburban area, that may be a great value proposition for you, as well as the other things I mentioned here: transit, family, safety, healthcare, education. If you can answer those questions for people ahead of time, you're really well positioned. Next slide, please. A couple of resources very quickly before I close up. Remotely Inclined, you can find on Substack. They talk about how small towns can attract remote workers. 21st Century Work Life is a podcast. Tulsa Remote, I already mentioned, and workforminnesville.ca. I would really encourage you to go there and take a look at version 1 of that program. Next slide, please. And so to close, very quick takeaways. I do view co-working as infrastructure for economic development. I really do think we should invest in that. The hub and spoke model can be used as a really strong attraction tool for larger employers, for communities, and remote workers, to me, are local jobs and a really skilled workforce. And if we can position ourselves, in their sort of search terms, and they are doing the searching regardless, I think we can really position our communities for success. Thank you very much.
Well, thank you, Brennan. That was a great overview. Some great initiatives there taking place, not just here in Ontario, but around North America. Really appreciate that. And I really noticed the conundrum too of, as city centers have become increasingly attractive and companies have relocated, commuting distances, of course, have increased, especially to offset housing affordability. We're creating obviously emissions and waste and all that kind of a thing of people's time. So I think that this is an opportunity to reset that. So thank you again. Always an economic development champion, of course, no matter the role. So thank you, Brennan. And looking forward to some great question and answers. I think I'd probably spend the rest of the morning, maybe the rest of the day on this, but we've got a few minutes. So what I'd ask the guests is to, of course, the attendees to ask short questions, and we'll ask for short answers as well, so we get as many questions as possible in. Thank you to all my panelists. All right. Well, that was a great session, and we've got some great questions here. I did want to jump to the first question came from Michelle, so we'll jump to your question since you were first. And Bill, this is for you, and I know Chris, you touched on it as well, but recently there have been some significant leases signed in the downtown. Amazon, Scotiabank are mentioned here. What do you make of those decisions, Bill, in a few seconds?
Well, I think it speaks to the growing diversity of the Toronto leasing market, beyond the professional services sector. Obviously, the bank is a traditional sector, and then you've got Amazon, which is a growing technology sector. and then also the emergence of Toronto as a global city. I think that's a testament to our city and the strength of the leasing market.
Very good. Thank you, Bill. And I know I'm going to switch gears now a little bit, but we've had a few questions in here, and Chris, you touched on that, and I think Brennan as well. Just talking about the opportunities for rural communities. Most of the people on the call today are going to be from rural communities. So maybe I'll kick off with you, Brennan. Just talk a little bit more about that. You touched on, I think, Muskoka, but just expand on that a little bit more, please.
Yeah, I mean, the big note is that the commuting distance is widening, right? So people, if they don't have to go to the office 5 days a week, they only have to go twice or regularly, let's say. Could somebody live in a Parry Sound and actually work in Toronto? Could somebody live in a Muskoka, or just sort of further out of Kingston, a Windsor, where, if that commuting distance is widening, it becomes more equitable. And that was one of the things that, Chris Rickett mentioned was, let's not tear down the regionalization of our economy, but let's talk about, building it back up in a more equitable fashion for pretty much everybody in Ontario.
Yeah, no, and that's great. I know that in communities like Tillsonburg, we've had a challenge with office space because some of that second floor office we don't have enough office tenants. But I think now, as you've demonstrated, even in Innisfil, there's an opportunity for communities like ours to actually grab some more of those office jobs that we couldn't get before. So thank you very much for that. Chris, did you want to chat on that at all, or are you?
Yeah, no, I think, Cephas, when you talk about the second floors, right, and Brennan really alluded to it, is looking at, like, how does that become flexible workspace? So yes, my job may be in downtown Toronto, but I don't need to go there 5 days a week, right? And so, maybe 3 days a week, I'm actually working in downtown Tillsonburg above a store and frequenting local restaurants and shops. And I think that's really where the opportunity is here, is as we have that flexible work environment, is that, there's a real opportunity to kind of see some reinvestment in our main streets and our downtowns, and again, get back to much more of a maybe equitable regional economic development, as opposed to what we've seen over the last kind of 15 years, where everything's been kind of sucked into the GTA, which has been good for the GTA, and it's been good for the province. Let's be realistic. The tax dollars that fund the province are generated in the GTA. That said, we need job opportunities across the province, and I think this flexible work model provides that.
That's great. And Chris, just keep going. There's a couple of questions in here as well about just what do you mean by equitable economic development? Are we talking about perhaps the working poor, or what do you think? What are you talking about?
Well, I think there's many ways you take that. So one, equitable, just in the sense of geography and how we've seen economic development and economic growth over the last kind of 15, 20 years, is that it's become very much more urban, and most of the growth has been concentrated in the GTA. Flip that around as well, looking at from an equity perspective when it comes to BIPOC populations, and the fact that, even though we've had a great economic growth over the last kind of, 10 years, that's been very concentrated, and hasn't necessarily got into, serviced a lot of BIPOC populations, which we've seen as a result of COVID, is that, white guys like us haven't been as impacted as many in the Black community who, at one point, 83% of all the COVID infections in Toronto were from the BIPOC community. And so, we also need to think about, as we're rebuilding our communities, it's not just about, regional economic development, but it's also making sure we're getting through to those populations, those racialized communities that have, were suffering pre-COVID, and need even bigger hand up and support coming out of COVID.
Right. So, okay, great. No, that's a great answer. And certainly there's two aspects of that, as you mentioned, the regionalization. So maybe outside of Toronto, and then also the various groups that may be impacted. Thank you. This was a question for Chris, but I'm going to ask Bill. Bill, are we seeing REITs and big property owners buying up main streets yet? Are they taking advantage of perhaps of some of these depressed prices in the market, especially in retail, to buy those up, or is that still to be seen?
I think there's some buying taking place. I mean, obviously, they're being selective in their acquisitions, but we've also seen, a bit of a reversal. Some major REITs have actually decided to become more urban players than suburban or rural players, and kind of unlock some of that retail that they have into other uses, which I spoke to about earlier. So there is a little bit of that, but I wouldn't say it's a booming trend right now.
Yeah. Okay. Thank you. And I know one of our Tillsonburg success has been that we have local ownership for the majority of our downtown properties. So I'm glad to hear that that's now taking place on that scale. So thank you for that. And Chris, I'm going to switch back to you. Some of the tech tools, and I know that you're really involved here, for Main Street businesses, that Main Street businesses perhaps could use to deep dive into analytics and make sure that they are getting that share of the growing online market, perhaps.
Yeah, I know. I think, a key part of helping businesses, Main Street, survive the pandemic, but also rethinking how it thrives post-pandemic is really embracing technology. And so often we just talk about like you need an e-commerce store and you need to do social media, but the reality is you need full digital integration in your operations. And so that means, having a client relationship management system, getting, better understanding what your customers are buying and how deep that relationship is, and starting to really kind of target opportunities to those clients. And in the past, that's been a hard thing to do in the sense of the expense of technology and sometimes how sophisticated the technology was. But technology, from a price perspective, is become pretty low cost now, and also much more user friendly. I know it's always a big change management piece, but we have smart business people in our communities who run sophisticated businesses. And what we found, in my work in Toronto and launching Digital Main Street is but once you give that little bit of, hand holding and get people comfortable, they can start to figure it out, right? And, we need to continue to invest in that digital infrastructure to support our independent businesses across Ontario.
Very good. Thank you. And I'm going to switch to you, Brennan. And I think Kay Matthews wins the award for the most questions, but she's got some good ones in here. So, Brennan, if a municipality sets up a co-working space, can you talk about the economic impacts or potential benefits to a municipality for investing in that co-working space?
Yeah, so I mean, there is some revenue generation potential, or I'm going to call it cost recovery. Co-working spaces are not the strongest business model in some cases, and that's really where I view it as public infrastructure, right? If the private industry wanted to make money on recreation centers, they would build them. Instead, it's public infrastructure. So I look at it very similar there. For me, it does go back to that second floor office space that may have some vacancy right now that could be a really logical contender for that type of stuff. Economic benefits, though, it really does work hand in hand with the Economic Development Office in that we're attracting on an ongoing basis demand for our communities. And often we have no place to put these people. I know in Simcoe County, we have very little commercial real estate. And if we do have it, it's new stuff that's $30 a square foot. So how do we place somebody into co-working space where there's less commitment, there's less risk, especially if you're a startup and as more communities are investing in the tech, industry and tech sector, they're looking at accelerators. There's sort of a partnership there and a complement there to work with. I do want to mention one thing very quickly. You don't necessarily have to build a co-working space. Libraries, I think, were mentioned in the chat as a wonderful opportunity. Event spaces that exist and maybe sit, very vacant during the day. Underused municipal facilities are also an option as well. So many different options for people.
Very good. Thank you, Brennan. I think we got time for one more question here. I just want to mention there, you mentioned SEO, I believe, in your presentation. Someone asked that question. I think that's search engine optimization. Is that correct?
Yep.
Okay, very good. All right. I think that there was a question here about maybe more toward Bill and Chris, I think, just on the side of industrial real estate and just what are you seeing in terms of demand that might be coming our way in terms of lot sizes, acreage, I guess 2 or 3 acres, and maybe even building space. Is there any kind of like 20 to 40,000 range or 100,000 that you can comment on? Bill, just in a few seconds, maybe take that.
Yeah, well, we have a supply demand imbalance in the GTA, and with sub 2% vacancy and or availability, pick one or the other. It's very, very difficult to get your hands on lots and buildings. So I think it spans the entire spectrum. From less than an acre, if you're looking at a lot size, to 300 acres, and that's why I mentioned in my discussion that the one option is to build up rather than out.
Mm-hmm. Yep. Very good. All right. Well, we are at 10:04, and I think we're going to bring this in for a landing 1 minute early, so we get our bonus presenters and panelists. But thank you again so much for your time here today and for contributing your thoughts and obviously expertise and professional advice. We got a lot of great questions, and now I'm going to turn it over to the events chair today.
Thanks, everyone.
Thank you.
Fantastic. Thanks so much, Cephas, Bill, Chris, and Brennan for an amazing session. EDCO is pleased to announce that in lieu of speaker gifts, a contribution to the EDCO Scholarship Fund will be made in your honor. This talk really highlighted for me the transition of our business communities and workforce that they're undergoing this huge transformation right now, and the opportunities for communities outside of the traditional city centers. I really like that talk about building back up in an equitable way for the entire province. So a fantastic conversation. Thank you so much. I noticed that Brennan Kenny has shared his contact information in the chat there, so we can further those conversations even more beyond the webinar today. So thank you once again, gentlemen, much appreciated.